What's up, boys and girls? Today we are going to answer a question that every investor is thinking about but doesn't want to believe is true. And that is the AI bubble finally bursting? Companies doubled just because they whispered machine learning on an earnings call. Nvidia became the face of the entire stock market and is now worth almost $5 trillion US. And investors started acting like AI is the second coming of the internet. But now we're finally starting to see the cracks. Volatility, sell-offs. The reality is starting to settle in, boys and girls. So join me in this episode as we talk about what's actually happening with AI, whether or not this is a healthy correction or if we're actually forming a bubble here, what history can teach us moving forward, and most importantly, what you as a Canadian investor should be thinking about in regards to AI and your portfolio. Let's get into it. Okay, so to understand whether that AI bubble is actually indeed popping, we need to first understand how it got so inflated in the first place. The AI boom kicked off in around late 2022 to early 2023 when generative AI hit mainstream attention. And then suddenly, every single CEO on earth decided that their company was going to be AI first. But the real reason that AI stocks exploded is because AI is the first technology since the internet that's actually going to change the productivity of almost every single industry on the planet. And markets priced that in real fast. Chip demand went insane, which led to huge gains in companies like Taiwan Semiconductor Manufacturing and Nvidia. And I'm sure you've noticed that. Then, companies like Meta, Microsoft, Google, and Amazon, they started pouring billions of dollars into AI infrastructure. And retail investors did what they always do. They followed the hype. Now, AI fever wasn't irrational, but it definitely did get ahead of itself. Now, here's where things get interesting. Over the past month or so, we've finally started to see something that hasn't really happened since the start of the AI boom. Stocks are finally starting to wobble a little bit. They're not crashing, they're not collapsing, but they definitely are wobbling. And here's what's causing it. Number one is slowing revenue growth in AI hardware. Now, don't get me wrong, chip demand is still huge. However, the demand is not growing and doubling every single quarter like it was before. That infinite growth narrative, it's starting to top out. Number two, we're dealing with insane valuations here. Don't even get me started on Palantir. And you know what? When the expectations for growth are so high, even a good earnings report can be disappointing, and that can hurt a stock. Number three, AI is expensive. No, really. I mean, it's really, really expensive. Building AI models, running them, training them, it all just costs a fortune. And most AI companies, especially the private ones, they're not even profitable. And AI can burn more cash than a jet engine can burn fuel. Just ask Zuckerberg. He should know all about it since he just said in an earnings call with Meta recently that the company expects that future capital expenditures are going to increase for the foreseeable future, mainly due to AI. Oh, and for full disclosure, I did just recently take a long position in Meta. However, nothing I say in this video should be misconstrued as financial advice, and that is not a recommendation to buy the stock. And lastly, at number four, hype cycles, they always cool off. I don't know if any of you have ever seen, a business cycle graph or a stock market cycle graph. I'll go ahead and I'll put one up here for you. But, basically we go through this period where we lead up to a massive sort of peak of overexcitement, and, we come back down, right? So there's peaks and troughs to it all. So it's, it's not going to last in the short term anyways. Long term will be fine, but definitely hype always cools off. So let's answer the big question. After all, that's the reason you're watching this video, is it not? Is AI in a bubble? And the short answer is, well, yeah, it sort of is in a bubble, but not the kind that you might think. Now, I know, that wasn't the simple answer that you were looking for. I get it. It never really is simple, but we're going to look into it further. Now, there's two types of bubbles. Bubble number one is, the ridiculous bubble. So think about weed stocks with, no profits and barely any crops growing. And that Hawk Tuah chick who rug pulled all the crypto bros and then got sued after. Now, these are just prices that go up for absolutely no reason at all. And bubble number two is the productive or the innovative bubble, like the dot-com era, or in this case, the AI era. Now, these bubbles can get overheated, but the technology is transformative and that sticks around. Now, the dot-com bubble did wipe out tons of stocks and they all went to zero. But people forget that in that dot-com bubble emerged companies like Amazon, Google, and we've got eBay, PayPal. Basically, the whole modern internet economy came from that dot-com bubble. This AI era is exactly the same. Sure, we're gonna have some companies that are overvalued and highly priced. And you know what? Some of them may even go to zero over time. But the fact is the technology is real, it's permanent, and it's going to be world changing. So yes, there's a bubble, but it's an innovation bubble. It's not a scam bubble. I don't know why, but every time I'm thinking about scams and bubbles and scams, all I can think about is that Hawk Tuah chick rug pulling all those people. And I know I said this already, but literally that's just what comes up in my mind every single time. Anyways, the dot-com crash had lots of companies with either little or no earnings whatsoever and were merely nothing more than a domain name with an empty promise. Now, we may have lofty valuations in a lot of these AI companies, but hey, at least a lot of them actually are turning a profit and have solid business models behind them. They aren't just an empty web page selling hopes and dreams. Here's what I think happens from here, based on history, math, and business fundamentals. Number one, I think we're going to see some short-term volatility. And in fact, I think we've already seen some. By the time you watch this video, you've probably already noticed that. And I think that volatility is going to be fairly large for some companies. I'm not talking about 1% swings up and down every other day. I'm talking about volatility, upwards of 5% in a day for some companies, depending on which ones they are. And you know what? When valuations are this high, that's completely normal. And I honestly expect that. Number two, some companies are going to be exposed. The AI companies that are just riding the hype train, but they're not floating down the revenue stream, you know what? Eventually, when those profits don't materialize, they're going to be erased, just like those companies in the dot-com bubble that nobody remembers. Actually, wasn't there some website like pets.com or something that had a crazy valuation? I don't know. I'd have to look into that. Maybe I can add a slide or something or a little blurb in this video. Number three, the winners will get stronger. This is key. The companies with real customers, real products, real infrastructure, real revenue, they're going to continue to grow and will probably dominate over the next decade. There may be fewer winners, but those winners will be monstrous. And lastly, at number four, the AI trend will continue. This is not just some little type of bubble that goes up and pops and it's gone forever. No, AI is going to continue on. However, the enhancements in AI and the productivity gains, these are going to come over, 10 to 20 years, not 6 to 12 months. So we are going to see that impact happen, but it's going to be over a much longer and broader time horizon. Markets obviously overreact in the short term, and I think that AI is a great example of that. So some of you are probably wondering if you should invest in AI right now. Here's what you need to know. AI is a trend. It's not a strategy, okay? It's a theme. It's not a plan. And most investors get caught up and burned by chasing themes. So here's my honest take. I don't think you should YOLO into AI stocks. I think that, if you had have done that a year ago, I would say that you gambled, but good for you. So I don't think you should be doing that. I do also think that buying individual AI stocks can be risky, and I think that it is going to be a volatile ride. So I think for most investors, you're likely to buy at the top and sell when it dips. So I probably wouldn't recommend purchasing any individual stocks either, unless you can weather that volatility and ride it out for the long term. And for most of you, you're probably already invested in AI, and you probably already know that. Any of you that hold, VFV, XEQT, XAW, any of the large world ETFs or anything that has exposure to the S&P 500, you've already got Amazon, Google, Microsoft, Meta, Nvidia. Like, you have all those companies already. So you've got that AI exposure. I don't think you need to be concerned about picking a winner. The index will automatically have those winners in there for you. And like we know about the .com crash, a lot of these companies can end up at lower valuations or go to zero, and the future is unknown. So it's not worth trying to find the needle in the haystack. You might as well just take that whole haystack home and know that you've got the needle in there. AI will drive market productivity for decades. The safest way to capture that is by broad diversification. Let me give you an example. Some of you may have heard of the company Caterpillar before. And if you haven't, you've probably seen their machines around construction sites. Well, Caterpillar is a company that is benefiting from this AI rush, but you wouldn't think of them as an AI stock, would you? They're certainly not like Meta or Nvidia. So how can they also be cashing in on this AI rush? Let's take a look. As we can see in this chart, Caterpillar has had a huge run up in stock price, most notably in the last 3 years, which is exactly when the AI boom began. Although this is a 5-year chart showing a 222% return, you'll notice that the stock price at the end of 2020 was the same as it was at the end of 2022. Effectively, that means Caterpillar has returned over 200% in just the last 3 years alone, regardless of this being a 5-year chart. The reason is because Caterpillar is benefiting immensely from the AI boom. Although they aren't a chip manufacturer or a tech company, they do have something else that is in high demand, which is their ability to provide resources for data centers. Data centers are extremely important for the continuation of AI, and these data centers are popping up everywhere as tech companies become hungry for more power. Caterpillar steps in by providing equipment and machines that are necessary to build these data centers, including generators, turbines, and other power generation systems. Caterpillar is a clear example of why it's not a bad idea to own the entire market as opposed to picking individual stocks, as most investors probably never even considered Caterpillar as a play on AI. As a final word, if you insist on investing in AI, I don't fault you for that, but please put a cap on it. Don't go overboard. Something like 5 to 10% of your portfolio is reasonable to maybe put in an AI-themed ETF, and just do so if you understand and know the risks involved. Anything more than putting 5 to 10% towards AI, for me, really starts to become more speculation than investing, especially when you consider how much of the S&P 500 is already, in fact, AI-based companies. And in my personal opinion, you'd probably be better off taking 5% of your portfolio and using that money to short or bet against some of the AI companies that are out there. Palantir. Here's the reality. We're not witnessing the end of the AI boom. We're witnessing the end of the fantasy period, where stocks only go up and nothing can go wrong. AI is moving into the execution phase. What this means is that companies are going to have to prove real revenue, costs are going to have to come down, winners and losers are going to separate, and the market is going to get smarter. This isn't the bubble bursting. This is the market waking up with a hangover after being drunk on AI for the last 2 years. And for long-term investors, this is actually a really good thing because according to history, most of the time, the best buying opportunities happened after a hype cycle cools off, not before. So to answer the question, is the AI bubble actually bursting? Not really. It's correcting, it's cooling off, it's maturing. That's really what it is. It's maturing. If you're a long-term Canadian investor, the smartest move is simple. Stay diversified, avoid hype, and don't chase stocks or themes. Just let the market do what it does best, which is absorb new technologies and reward the winners. If you found this video helpful, please hit like and subscribe to Snackable Wealth, where I provide you with more blunt and honest Canadian money talk. And hey, let me know in the comments below. Do you think that we're in an AI bubble? Why? Or why not? Until next time, see you in the next one.